Earnings season is coming up here in Australia in August, and look, it should be one of the best ones that we've seen in years.
Julia Lee, welcome back to Dukascopy TV. It's a pleasure to receive you again.
It's great to talk to you again, Natalie.
Okay, so post-Brexit fallout still really very present within current markets. Who are some of the worst affected stocks that we're seeing at the moment?
Look, 2 weeks after the Brexit, we had seen stocks that, like CYB, down a massive 31%, Henderson Group down about 27%, and BT down around about 25% as well. And on the flip side, what we saw were gold stocks surging. So Evolution Mining has been one of the best, up 36%, and we've also seen St Barbara and Saracen gaining 26%. Now, the fascinating thing is 2 weeks post-Brexit, they were three of the best and the worst performing in the ASX 200. Just recently, though, we have seen some signs that the tide is turning, and instead we have seen a lot of interest in some of those Brexit stocks like CYB, Henderson Group, as well as BT. And, well, gold stocks still doing well, but mostly on concerns of the macro backdrop.
Well, that was what I wanted to ask you about. I mean, obviously, when we see stocks shifting lower, that's also creating some buying opportunities. Are we seeing some of those types of opportunities emerging out of this scenario?
Well, brokers are becoming increasingly positive on some of these Brexit stocks, and that's understandable given the huge price drops that we are seeing. So there is some value in terms of these stocks. The question is the fallout limited to what we've seen, or is it going to get worse? For example, if we have a look at a stock like CYB, Bell has a buy on it and quite a big target on the stock as well. And in terms of the banks, CYB has a very high CET1 capital as well as leverage ratios. In fact, it's sector leading, and it also has a diversified portfolio away from London. For example, about 30% of the property portfolio is in Scotland. So CYB, it's still a cost out story, still looking good to us. And the other one is BT Investments. Now, it has exposure to the UK and Europe through its Joe Hambro. 3 out of the 20 funds are domiciled in the UK, which means 17 out of the 20, there's no real risk there. The risks there are to inflows, equity market performance, as well as currency. And even if you adjust for that, there is some value there.
We touched on some of those gold producing stocks earlier, and they really have continued to rally. Sort of investor interest remains undeterred. Do you see that as an ongoing sort of trend, or is this sort of really more a summer surge?
Look, this is really unusual where you see risk assets like equity markets with the S&P 500 over in the US pretty much at a record high and gold surging at the same time. And I think that's because investors are still concerned around the macro risks despite equity markets doing relatively well in some parts of the globe. Now, one of those risks, of course, is to European banks, where we are especially watching Deutsche Bank, which is trading, less than 10% of the value it was trading at the peak back in 2007, and of course the Italian banks as well with the non-performing loans there and the need for a bail-in or a bailout as well. So really the market's concerned around some of those macro issues haven't disappeared, and also the US interest rate outlook also key to gold as well.
Well, of course, because we do have to consider, sort of that macroeconomic outlook as well, and obviously Brexit has played a huge part of that, US Fed interest rates. What's sort of the next thing then on that macroeconomic agenda, or are investors more likely to be turning to something like reporting season, which we also have coming up?
Look, I think it's a combination of both. We know that the macro environment, the global macro environment, has a big impact in terms of expected returns. So watching interest rate expectations over in the US and also watching the financial institutions in Europe very closely. But on the other hand, earnings season is coming up here in Australia in August. And look, it should be one of the best ones that we've seen in years. And that's because commodity prices have bounced back. So watching the mining space especially, because I think we will see outperformance there. And of course, the lower Aussie dollar over the last 52 weeks has also helped. But recently, the Aussie dollar has been quite strong. So the outlook with some of those Aussie dollar sensitive stocks is going to be very important. But altogether, I think it's about US interest rate expectations, European financials, and also earnings season.
Julia, thank you so much for the comments. Always great.
Always a pleasure. Thanks, Natalie.
Julia Lee there from Bell Direct, giving us her insights into some of the upcoming events on the Australian market. That's all we've got time for right now. I'm Natalie MacDonald. You've been watching Sydney Direct on Dukascopy TV. Goodbye for now.